Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Wednesday, June 3rd, 2009. Well, we're seeing a solid sell-off on Wall Street today, folks. We're seeing across the board continued selling after a gap down this morning. Alright, we're going to talk about why did we gap down this morning, because a lot of people will point to the ADP jobs number, but it really wasn't that. The S&P right now is down about 17 points, Dow down 111, and the NASDAQ down about 23. So it's a solid loss across the board, but really not a huge loss. It's not like we're down 200-300 on the Dow by any stretch, just slightly over 100. And really, again, as I mentioned at the beginning of the video, the key here is not the ADP jobs number, which basically came in line. Could that help add fuel to the fire? Because, yes, it was right in line, but people constantly are expecting better, better, better. Yes, of course, that can add slightly to it, but for the most part right now today, and we talked about this and drilled it into every one of our subscribers, every one of our traders' minds out there, is that it's a dollar issue. Constant dollar issues here have everything to do with why the market goes up or down. Now, why is it the dollar? As I explained in the previous videos, all of the last few weeks and months, both the premium subscribers and in these simple videos here I put out, it's all about the dollar's effects on commodity prices. We've had a monstrous reinflation rally that's basically taken oil from $35 almost to $70, almost a 100% move off the lows, and that's going to have an aspect. When the dollar continues to drop like it's been doing, and take a look at the daily chart of the UUP here, look at this drop just recently, all the way from up here, all the way down here. Alright, when that happens, you're going to absolutely get a reinflation rally, and that's exactly what the government has been aiming for. They know, it doesn't take a genius to know that when commodities start to rise, you're going to have certain key stocks start to rise. Alright, ExxonMobil, Chevron, you name it out there, Alcoa, Freeport McMoran, all these players are going to get a bid. It's going to help the market get on foot. When you have copper prices huge, steel up huge, oil up huge, you name it, it's going to help the markets, and that's what we've been seeing. So all of a sudden, today, the dollar is getting a huge bid. Huge jump on the dollar today. Look at this jump on the dollar. Absolutely tremendous move higher on the dollar from a gap, really a gap up all the way to here, and it's continued to make a move up, pulling back slightly right now, pausing. So that's obviously going to put pressure on commodities. What happens when commodities drop? Absolutely, folks. Markets are going to drop. No doubt about it. Dow right now down about 116 points as commodities continue to get hammered. Alright, and again, you can look at certain stocks. ExxonMobil here, down $1.15 on the day. Alright, that's after a run up the last few days in this monstrous little late rally over the last week or so we've seen in this market. ExxonMobil selling off. What does that mean? Markets are going to be under pressure. So you have to remember what the real core of the situation is here, which is it's all a dollar issue. Dollar is down today. Dollar is up today. You have the commodity prices down, and yesterday we had the dollar just down slightly, and commodity prices really held this market up when financials got hammered. And it's all about how the commodity prices are shifting this market right now. And going back to the spiders, I want to show you, folks. So simply put, that's why you saw a gap down today. It wasn't because of the ADP number. You're going to see lots of talking heads talking, oh, it was the ADP number. It's oil. Oil is down $3 today. We haven't seen a $3 drop in oil in a long, long time. And I called this last night in the premium video, folks. If you're a subscriber, you know. If you're not, you should join, because I said going bullish on the dollar here off of major support for the near term, obviously for the day or so, and I said going bearish on the oil trade. Alright, you got to have a pullback in oil. You're seeing a monstrous pullback. I can show you the USO chart. Look at this collapse in the USO, folks. Major drop in the oil fund here, even paused right on the 200 moving average and collapsed right through. So a beautiful continued sell-off on oil, down $3 on the day on spot crude. And again, it's all about that's driving the market down today. Notice the gap down here. Yesterday, you had one of those sideways days. I talked about this yesterday, how you were between two key levels, the 94.40 to 94.50 level and the 95.25 area. Right here, you had stayed in this range for quite some time. Basically going back 2 days almost, where you had been in a sideways range, up and down, up and down. Ultimately, what happens, we gap below it, meaning we break this level. You never even make an attempt to get back to this channel right now, and you just continue to gap down and sell all day, as you can see here, as we are trading really right at the lows of the day. Now, there are some key levels coming into play, guys. Absolutely key. We're going to touch on those now, but these are your key levels on the charts. These are exactly the levels you should be watching. Now, on the gap down, why do you think I had this blue line here? Alright, at right around just below 93.50. 93.50 on the spreaders. Why was this line here? As you can see, it worked out beautifully. Amazing support. We called this out in the chat room. That's another thing those of you that are traders out there or interested in education should join the chat room and check that out, because it's just intense amount of some knowledge being conveyed, calls being made, and so forth. And this was one of them. This support line, look at the bounce right off of it. Now, why was that so key, as I mentioned? Well, if you scan back, look at this. Gap window. You have to know what's your key levels, what makes a good support, what makes a good resistance. Gap window support right here is going to, without a doubt, be a good support. It sure enough was. As you can see, right down into the blue, what happens? You have a little tail there. That's a scalping opportunity. You can ride it up for a nice little bit of change. Retests, pulls, bounces back up, and then finally here pauses and then breaks. Once it breaks, you have inside bars consolidation that tells you we're going to go lower, and that's where we sit right now. Now this next line coincides with the 200. Here's the 200 moving average on the intraday chart. This line, what do you think that coincides with? Well, let's go back and find out. Alright, right here, gap fill, guys. This would be gap fill right down here, right around the 92.50 to 92.60 range if we get down there today. I don't know if we'll get all the way down there today, but if we do, that's going to be your support line right here, 92.50, 92.60, along with the 200 moving average. Now, the 200 will slope up, continuing throughout the day. That will be first support. When we hit that, you probably do expect a little bit of a bounce, but ultimately that gap fill is what we need to get to, without a doubt, here in the markets. So constant good selling today. We're really near just off the lows of the day, getting a minor bounce right now. You are really due for a near-term bounce, but I could see them flushing it down to the 92.50, 92.60 level. Would not surprise me at some point today. The markets remain, again, in all fairness, folks, this is just a minor pullback as of now off the monstrous move we've had. We've been up literally 40% pretty much across the indexes. NASDAQ's been up as much as really 45% or more from the lows back in early March. That is an unbelievable move. Now today, what's going on? We've basically seen non-existent volume ever since the beginning of the day. Look at the volume down here. You had good volume initially on the sell-off, then you went into no volume situation. The volume, the middle portion of the day where we went sideways and then have broken down a little, has been almost non-existent in this market. That has to be watched very closely, because if you get a buy program later today, it could spike the markets up very easily without any volume behind it. Watch that very closely. Now, there are some sectors. The sectors today that are doing poorly are commodities. All right, you can look at any stocks. Look at U.S. Steel, down $2.50. There's the chart on U.S. Steel. Look at Cleveland Cliffs, down $3 on Cleveland Cliffs. AK Steel down $1.36. You know, you can look at any of these folks, really, to be honest. ANR, Alpha Natural Resources, down $2.25 here. So they're getting crushed without a doubt, as oil is, but what are the strong areas? Because obviously the market's only down 100 points, and the way these commodity stocks are going, you would think we were down much more. The strong sectors out there are technology, no doubt about it, folks. Technology is holding up. It's not all pretty there, but for the most part, it is very, very pretty. Look at Apple Computer, AAPL. Positive on the day, up 59 cents. So we have the market that's getting hammered. Even the NASDAQ's down about 24 points, and Apple is up. So Apple's holding things up. If Apple was not positive, Baidu, BIDU is another one. BIDU is positive, up about $5 here on the day. And you also have Google only down 75 cents. That's a $400 stock, $427 stock right now, only down 75 cents. That's basically what I consider to be flat. Alright, so these things, folks, are keeping the NASDAQ, the tech sector, higher and not really taking the same brunt as what you might expect with the commodities declining as much. The other area that's not really getting hit too poorly is the financials. Now, financials were weak yesterday, but commodities held us higher. So the market's actually closed flat to higher. Today, folks, financials are stronger and commodities are weaker. So it's like a rotation. Money flows here, then money flows back. Money flows here, money flows back. And that's what you're seeing today. Look at Goldman Sachs. Goldman Sachs barely down $1 on the day, down 96 cents. For a $142 stock, when the markets are down over 100 points on the Dow, that's not a bad drop at all. It was just a minor level. JP Morgan, down 16 cents. What's 16, 15 cents right now? Nothing, right? Wells Fargo, down 11 cents. Bank of America, down 7 cents. So what I'm saying here, folks, is I'm just pointing out what levels, what areas are strong, what areas are weak. It's commodity driven today. This is a dollar issue, continues to be a dollar driven market, and you'll notice when the dollar is down, this market will be up, and when the dollar is up, the market will be down. That's simple, folks. All right, that's all for me today. Definitely come join the Research Center to really get into this stuff. This is so important. If you're not doing this stuff and you're not learning, then you're just giving money away. That's as simple as I could say it, guys, without a doubt. Also, join the chat room. We have a webinar this weekend. Sign up for that as well. We'll talk to you soon.